that you're asking $100,000, $1 million to invest in your project, they want to know if you're all in. I don't care if you have $10 in your bank account. This is not the right time for you. That shit. I don't even know if it's safe dropping this because not a lot of people know this.
Yeah, venture hustles, life is really what you make it. Building up your brand is whatever you create it. Really ain't no limit. You just gotta love it. Working day and night, it's all about the venture hustle. Hey, venture hustles. Time to take it to the next level. Let's go.
Welcome back to the Venture Hustles podcast. We've got Jack and Saj, your co-hosts, for today's episode, and we've got a really interesting topic. We're going to be talking about investments, how to raise money for your project, for your company, raising investments, venture capital, angel investments.
Yeah, different ways to raise money.
Different ways to raise money. That's just kind of like some of the things that we'll touch on a little bit today. But how we doing, man? How are you, Jack?
We're doing well. Today was it's been a good day, good week, a little hectic, but it's going well so far, and it's hump day today. So
it is hump day, but it's usually one of my favorite days of the week.
Is that so?
Yeah, it's because the rest of the week wraps up pretty fast. Mondays are horrible, I think it's for everybody.
Yeah.
But it's like Thursday, and then you got one more day,
Yeah, this is true. I think, before we get into, the meat of today's, episode and conversation, something that we wanted to touch on, Horton, for those that has been following us, he's been with us for a handful of episodes.
The first couple of episodes we started with our third. Horton was the third co-host of the podcast.
Yeah, and so he's no longer with us. He had to depart and leave for some personal reasons. So we're wishing him all the best, and I'm sure he'll still be watching. So quick shout out to Horton, and wishing you all the best, man.
Yeah, that's pretty much where we are, and we're moving along. We've had quite a lot of feedback, positive feedback. We've been checking out the comments. We've been seeing a lot of new people that have been commenting and giving us feedback and just kind of like positive energy and vibes. That's really cool to see,
and we appreciate that. And we do look at the comments. So for those that are commenting positive things or even negative things, we look at the comments, we appreciate everyone's feedback, and we take it into consideration.
I don't think we've had like any crazy negative feedback, but I think we've had some good constructive feedback. But it was cool to see some people just like even like commenting back at some of the other comments and just like understanding a little bit better of what we were talking about. But
yeah, for sure,
we know we're reading what you say, and we're keeping in mind, and our goal is to always improve as we get through some of these episodes,
Absolutely.
And that's the goal.
Yeah. So today's conversation episode, how to raise money, why should you raise money, when to raise money, different, routes and avenues to raise money. So, Saj, I know you have a lot of experience, with this. So I think, what does it mean to raise money for your startup?
So when you're starting a new venture, and
hashtag venture hustles, hustling a venture.
Yep. Okay. Hashtag venture hustles. Yeah. When you're starting a new venture, a lot of people, you're either going the self-funded / friends and family route, or you need outside investment.
Yeah.
And you're even if your project is or your company is self-funded, you're going to have a limited runway. And at a point, unless it's like, especially when it comes to tech startups, tech startups operate on a mindset that this is an idea that is revolutionizing a certain space, or adding value to a certain space that already exists. So, when it comes to proof of concept, it's a lot of it is untested. There are no rules. There are no regulations. They're creating that. I mean, this is the world that I came from. You're creating the rules. You're creating the regulations yourself, and a lot of it comes with an area of untested waters, and with that is risk. And with risk, with every investment involved in that project comes even a bigger risk, a risk of return for the investment and for the investors. So this is why that's an area where you're going to run out of runway, because it's unless you're in the world of immediate gratification with return or revenue that you see from the company, then you're not really going to experience that with self-funded projects.
Well, yeah.
Does that make sense, or is it confusing?
No, that makes a lot of sense. And to provide some a clarification as to what Saj means when he says the term runway, essentially what that means is runway would be defined as if the company was not to make a single dollar, how long could you last? Right? So that would pretty much be, what are your costs, whether it's operation costs, employees, marketing. So that's what, I want to clarify that for people that may not be familiar with that term. And typically, right, an investor wants to see, runway of what? That's at 12 to 18 months is kind of that sweet spot, right?
18 months is a sweet spot. So if you're, I guess, like from a pointer's perspective, like this is what, if you're pitching to a VC or your
venture capitalist.
VC, are there venture capital firms, venture capitalists, and let's say you have a meeting with them, and you've got a presentation deck and a pitch deck, right? And your goal is to kind of sit down and tell them about your vision and how you envision this to be the next big thing. Yeah. And around that time, you're mapping out your financials, your roadmap, your 5-year summary, projections, right? And the runway, the 18-month runway is something that is very important for investors. They want to know what you're going to do in that period of time with the money that they'll give you. So, without kind of jumping out of focus here.
Well, yeah, I thought it was important, obviously to provide that context. But I think you did, a good job describing, what it means to raise money. And I think this now will lead to, I think it's why you should raise money and then when you should raise money. So maybe it would be best to go over why you should raise money, and then that might lead into when you should, right?
Yeah, so I think that, so think about it, right? If you had a startup that you came up with, and it was a technology startup, and it was an app, let's say, right? These are the clients that we usually deal with at FFP. Like 100% of our projects are pretty much like the clients that are building apps, almost all of them, right? Whether it's a web app or a mobile app.
Some sort of software, yeah.
Yeah. So a lot of it is service-based. Some of them don't even have a subscription model. Some of them don't have in-app purchases. So then the question of how do you monetize? What is your business model? Yeah. That becomes a gray area. So it's important to know this is something that you deal with every day, right? You personally at FFP. Yeah. And to a lot of people that don't know FFP, we don't talk a lot about it. It's Finally Free Productions. This is the company. This is how me and Jack know each other. And we're a lot more than just like we're friends now. But outside of that, from a work capacity, that's how we know each other. Yeah. And at FFP, we focus solely on technology. That's the bread and butter. So we build custom applications, custom software, custom technology, and we deal with clients that have all kinds of. Mostly all of them are in the startup space. So correct. They all basically come with the next Uber idea, or just we hear all kinds of ideas on a daily basis, and some of them are amazing, some of them are not so awesome. But that's our job, is to kind of bring that to fruition. Yeah. But kind of circling back to that, right? It comes down to like, how do you monetize, right? And what is the business model? So in my opinion, that's the main central goal. Like, is your goal, like, I think identifying what is your IP? What is your intellectual property? What are you doing differently? Especially if you're a tech startup. We've talked about this before, value proposition, right? Yeah. I know these are buzzwords and people probably hate hearing them, but there's a reason why some of these things exist. Yeah,
without a doubt. And at the end of the day, whether it's a tech startup or any kind of startup, when you start to discuss your business model, that's what makes it a business and not a hobby, right? Yeah. You want to make money from this and provide a service, or provide something where you will, in return, receive money, right, or income. Yeah. It's definitely something that we deal with on a daily basis. And from a raising money standpoint or investment standpoint, one of the things that an investor would want to know, whether it is a VC, whether it is an angel investor, which we'll go over the differences between. They want to know, how am I going to get my money back?
Yeah.
Whether it's 50,000, 20,000, 100,000, 100 million, how am I going to get this money back?
So I think it's important, like, you asked a great question, right? Why should you raise money?
Yeah.
Like, that's like a really important question.
I agree.
So coming back to that, right? We're talking about, okay, I've raised, I personally have $10,000 from my previous job saved up for this project that I want to start, which is entirely experimental. Sure, it might have insane amount of potential. And sure, maybe it's never been seen before in the market. It's unheard of, right? These are all factors that may play into you deciding that you want to go all in.
Yeah.
So number one, I think your motives should be clear. We've seen a lot of clients and we've dealt with a lot of startups personally, coming from the startup world.
Yeah.
You have to go all in. You cannot be half in, half out. You cannot have a side hustle. You cannot be doing another job on the side while fueling this. If you want this to work, if you want an investor that you're asking $100,000, $1 million to invest in your project, they want to know if you're all in.
Yeah, I mean, something that can be summarized would be, if you're 99% in, you're 100% out.
I love that.
You like that?
Yeah.
You like that?
Yeah, it's good.
I mean, and again, how can you expect someone to treat this as a priority if you're not treating it as a priority? And that's pretty much what it comes down to.
Think about it like this.
Yeah.
So now my capacity, from a little bit about my background, right? Like, this. I come from a hardcore startup world. I've done a lot of this. I've done all of this. I've been through this from the most raw form you can imagine, right?
Yeah.
To raising money, going to these VC meetings, being in some big rooms filled with a lot of intimidating investors, and presenting the idea, raising money, successfully closing. Like, these are things that I've gone through that cycle. The capacity that I'm working on right now, and a lot of what I've been focusing on the last 2 years, has been kind of like on the other side a little bit.
Yeah.
Where I've been helping and assisting some startups going in, and also like personally investing. But when, let's say, I didn't really think about this a lot when I was on the other side of the table, when I was on the startup side, when you're raising money, right? Which is like, if you're not all in, and the reason why I say this is so important is, like, from an investor's perspective, why am I going to fund a passion project where I know you're not all in, where I know that that's not 100% of your focus? I don't care if you have $10 in your bank account. This is not the right time for you then. I'm not going to fund a theory, right? My goal is, I want to know how, so that's why that's really important to identify. Like, how much time are you devoting to your project? Do you have a part-time job? Look, everybody's got to pay bills, but plan for it then. There's a right time for it. That would be my advice.
Yeah, for sure.
You know what I'm saying? Like,
I mean, at the end of the day, it really comes down to making a decision, like, to go all in, and as you're listening to this, when I'm saying, or in Saj saying go all in, like, we don't need to go and explain that. Like, everyone knows what it means to go all in.
Yeah.
If you're questioning if you're all in, then you're not.
No.
It's all in, no plan B.
Yeah.
This is it.
This is it.
This is it.
You can always have like a fallback plan, and that's okay. That's how the human mind works, right? That's a safety net.
Yeah, I mean, we can get into that,
I know, that's
but Saj and I, have a different opinions about that. But again, you can't expect someone to treat this as your startup idea, whatever, as a priority if you're not treating it as one. I think that's what it boils down to ultimately.
So you gotta, and the reason why I say this is not like, I want to make this clear, right? I'm not trying to give empty advice. Ever advice to anybody, or any feedback I give to people, if I haven't tried and tested it myself, or I haven't been through that, I will never say it.
For sure.
Like, I will never read an article and be like, oh, this is cool, let me talk about it. You know what I mean? That will never happen. But I've done that. I was teaching. I was doing part-time jobs when I created the first company the first startup that I ever had, It was an idea that I came up with in college, but I still had to pay for my apartment. I had to pay for my bills. And then I had to pay for employees in the new company that I created. I had to pay for the developers and the designers. And I was like, how am I funding all this? I told you, like, the first company ever, put in $100,000 over a period of time to fund that first company to get it to where it needed to be, personally, right? But I realized that had I saved that money, And had I planned for that money to be an investment, not knowing whether anyone else is going to invest or not, before I had anybody else outside of me, any VC, anyone, had I planned for that, I think from an efficiency perspective and the overall outcome would have been significantly different.
Yeah.
Like it's a lot better if you plan for it and then go all in and just eliminate, just be zero focused, zen into that idea. That needs to be what you breathe, like blood, sweat, and tears, literally all day, every day, 365. That's
what it has to be.
Mm-hmm.
You know, for sure. I completely agree. You know, obviously the bills need to get paid, but you know,
that's the reality of life, man. It's like,
it is.
You know what I mean? Like,
yeah.
Like it depends on your background too. It depends on where you live.
Mm-hmm.
You know what I'm saying?
But well, I mean, would it be fair to say that, let's say you're working at the startup 12 hours a day, and then at night you're doing your delivery or doing whatever?
That's what I was doing.
Yeah, exactly.
But the thing is, like, that's
to
not,
put
that's
it in
not viable.
perspective.
No, so like, I mean, so what side are you on? I'm trying to understand that.
What?
On this particular matter, what do you think is?
I think it should be, so I guess I think for me what it comes down to is, like, bills need to get paid, right? But for the majority of the day, right, you're working on your startup to try and move it and progress as much as possible. And then you do as much as you can to get the bills paid, you know? You might not be taking that overtime at work.
No.
Because as long as your bills are paid,
mm-hmm.
your free time.
Mm-hmm. But that's what I'm saying. Like, I'm not saying this like easier.
It's not easy. No,
it's not like easy, and it's not like easier said than done. Like, I get that. Like, I've come from that world. I've done that. I've done both sides, and I know exactly how it is. And I'm just saying it's not optimal. I'm just saying it's not viable. It's not reasonable for you to get the max results that you would need for what you envision your startup to be, or your company, or your project, anything really.
You know, operating on 3 hours, 4 hours of sleep is not optimal. But when you're in that kind of situation, I mean, that's the only way that you get this job done, is you're working 6 hours at your, let's say, your job, quote unquote. You're dedicating 12 hours or so to, or even more, to your startup. And then those leftover hours, you're sleeping, and then the next day you're back at it. You maybe have time to eat. You know?
Yeah, I mean, I don't want to I don't want to dive into habits and like things that maybe that could be an episode that we talk about in the future. Is like, what would we do in personal scenarios? You know,
some habits for success for sure. I'm big on that too. So
100%. I think we should. Yeah, that's definitely something that we should touch on. But I think circling back to that question, right? Like, why? So the reason why I even said that, I'm sorry, like we kind of like digressed a little bit, but was because, like, if you identify that, if you're not even all in, like, that question for me personally, I don't think does it. Yeah, exactly.
You shouldn't.
Yeah, exactly right. Now let's say that's addressed, right? Let's say, or even in your head, you're like, screw what Saj is saying or Jack is saying. I've got this in the back. Let me get to the next bit, right?
Okay.
And let's say you're like, okay, why should I be raising money? Your personal investment, or friends and family of, let's say, 20,000, 10,000, 50,000 even, right? It's only going to give you that runway that Jack was talking about earlier. And it's only going to give you X amount of, like, sure, you can stretch that and be like, you know what? I got 50 G's. I'll make this work for 2 years. It's great. But that's not what, like, there's something called go to market. If your idea is phenomenal, your idea is, we've talked about this in episode 1 or 2. If your idea is unique, revolutionary, and you're like, man, we need to test this out. We need to have people see it, download this app, test out this concept. You need to go to market fast before somebody else beats you to it. Yeah. And has that ever happened to you? What? A lot of people experience, like, when they see this cool idea or concept, and they're like,
I thought of Facebook in 1972.
Yeah.
I mean, has that happened to me?
Personally?
I can't say it has.
Like, have you ever seen, not just someone that you know, like any sort of project?
Like, no, I'm saying for me, like, I thought of an idea, then I saw it.
Yeah, and then you were like, oh man, I thought about this.
I don't think that's ever happened. I would say, like, 1 or 2 ideas of my own that are, stored away somewhere. I haven't seen them come to life yet.
But I don't know if you remember if I told you this, but there was a project that we worked with at FFP for a client. Don't disclose the name of the client or the project, but when this happened, I was like, this is something that I worked on back in like 2011.
Oh, yeah.
Do you remember that?
Yeah.
It still doesn't have a perfect solution because that project got botched.
Yeah.
Like, they couldn't go to market and couldn't. By the way, perfect example of what I was saying earlier, right? which is
priorities thing.
Priorities thing. What, again, without disclosing, the concept was by a bunch of professionals in the medical industry. They came up with it. They had successful jobs. That was their day job. They came up with the concept, and as you know, if you're a doctor, nurse, whatever it is, you have a very hectic, busy schedule. You have no life, essentially. It's like you're putting it.
Everyone who's
100%.
Yeah.
But coming up with a concept like that when you're a doctor or surgeon or anything like that, or you're, it's cool. You're like, oh, I want this to go live, but the reality is you're not all in, and investors are not going to fund that. Doesn't matter how successful you are in your secondary job.
So let's now go to the other side, right? Which we started to get into, which
100%,
which is, let's say let's say I think the most value added is like route or something we can discuss would be, let's say you have that startup idea.
Yeah.
Let's say you're on the ground. Let's say maybe you have some you have customers, you have clients, and you have money coming in the door, right?
Okay, so now you're talking about an alternate situation where when you do have clients, you do have some money coming in.
You've gone through the grind.
Because that's not typical for startups. That's what I'm saying. But what do you mean by gone through the grinds?
Right. You're at a point now where you have a couple clients, right? And now you want to expand. What does that look like from a standpoint of raising money?
See, I was thinking of a more dire situation of addressing this because that's not typical for startups. That's that's what I would say.
Okay.
But that's a good problem to have. For me, if I was in that situation where I've spent, let's say, $20,000 and now I have clients and money coming in the door, I would plan better and I would strategize. It wouldn't be scaling within 2 years and like 5 or 10x exponential growth, but it would be growth nonetheless. That's how I would plan it. So for me, that's a different strategy conversation.
Okay.
But I mean, should we address that then? I guess.
I mean, what
I was thinking more of like what would be typical for like startups, right?
Okay.
Like that are.
So then in your mind, what's the other angle then?
The other angle is like you're out of money.
Okay.
And you're running out of money fast. Let's say you've mapped out 18 months, right? And you've got like $20,000 and you've planned out.
So let's say you're at month 12. You got 6 months left. That
was my point.
Okay. Go ahead.
So what do you like? When should you raise your money? First of all, is that the time? So now, not every startup's getting funded. 99% of the companies are going to fail. You need money. So there are two routes, right? Let's say you want to raise money through friends and family. You want to raise money through crowdsourcing, or you want to go the VC or the angel route. Crowdfunding, or go the VC or the angel route. So let's break all these down, no?
Sure. I think friends and family is pretty straightforward, right? Crowdfunding. So typically, there's a bunch of platforms out there, right? So let's say Kickstarter is probably the one of the more larger ones. I know Kevin Leary, invested in that platform. There's like Indiegogo, there's Start Engine.
Fun fact, Kickstarter were our neighbors in Brooklyn.
There we go, ladies and gentlemen.
They had block parties all the time.
Yeah.
It's kind of cool.
Pretty cool.
Yeah.
Small world, Going back to our networking episode that we just released, you just never really know.
Yeah.
You just never really know.
That was the coolest thing that happened in Greenpoint, by the way. When Kickstarter moved their HQ, literally same block as us. It was like so cool.
It's crazy. So if you haven't listened to networking, listen to it. Got some tips and tricks in there. You never know who you can meet. But anyway, I forgot.
So
I forgot.
Sorry, I kind of derailed you off with the Kickstarter thing.
I forgot.
But you were talking about crowdfunding.
Okay, yeah. So platforms like Kickstarter, Start Engine, Indiegogo. I mean, there's a bunch of them out there. So in terms of how they operate, they have their own uniqueness and a little bit different. But the overall concept of crowdfunding is, you would make, let's say, some sort of campaign or post on the platform.
Yeah. You
would promote it, have a description, information that you would want, potential people that wanted to invest to see. Essentially, it's a place where it's almost like GoFundMe, right? If you're familiar with GoFundMe, but for your company or your startup. So it's a bunch of people putting in, certain amounts, smaller amounts to hit your goal of, let's say, 100,000, 200,000, even 20,000.
Okay. So also breaking that down a little bit more.
Yeah, go ahead.
Crowdfunding has like two types of crowdfunding.
Yep.
One is like the typical Kickstarter, Indiegogo type, where let's say your idea is like this futuristic pogo stick, right? and it's a physical product that you like been revolutionized. I don't know, a smart pogo stick, whatever, right?
Not a bad idea. Sounds cool.
Hey, you're welcome. But let's say that's the concept, and you can actually give people products. Like you can sell, like let's say you raise, the target is when you raise $100,000, and if someone is buying the product as like an early bird investor, they're not really getting a share. They're getting the product for a cheaper price or a premium price with extra perks, whatever it is.
Yeah, exactly.
That's what Kickstarter, Indiegogo is. There's the other side, which is you're actually not really giving any physical perks or products if it's a service idea or an app. You're actually raising money, and this is something I'm significantly more familiar with because an ex-partner of mine have done that. They raise a lot of money through a platform where they say, well, we have 1 million shares open out of 10 million shares, and each dollar gives you X amount of shares. Yeah. And the same exact thing that you were explaining, but formatted differently.
Yeah, exactly.
So you're not really giving away a product. So there are a lot of platforms like that. I can't really, I know like since I've last kind of like been in that space, a lot has evolved. So that there's probably so many competitor platforms. Sometimes they'll even like woo you in. They'll give you free promotion. That's kind of what happened.
WeFunders is another one that's really good too.
Exactly similar to that.
But I would say, if you're listening to this, just like, all right, well,
Start Engine. That's what I was thinking about.
Yeah. Well, even with Kickstarter though, you can do like equity, like shares and stuff too.
Oh, you can now.
Yeah. But I would say like if you're someone that's like, okay, I'm in this space, I want to do it. I would say your top 3 would probably be, in my mind, is going to be Kickstarter. It's going to be, I think Start Engine is good. I would tie that probably with like WeFunder. And then I would also check out Indiegogo. Indiegogo is like a little bit more of a...
it's smaller than
like
Kickstarter for sure.
It's very small, and it's a good like starter.
Yeah.
Like
good.
If you're not really, you don't have any idea what we're talking about, like go to Indiegogo and check it out. It's much more beginner, like it's accommodated for beginners, I'd say.
Yeah. Okay, so that's so we talked about friends and family, and then what else did we talk about? We said
we've spoken about VCs a little bit. Crowdfunding we kind of just dissected. We can definitely go into like the difference between a VC and angel investor.
Yeah.
And then I think after we go through that, right, just to kind of give you guys a lay of the land here, I think we go into when you should, and then maybe get into the details as to how to actually do this.
Yeah, I think when is a really good question. Yeah. Simply because let's say you're out of money.
Let's discuss angel investors first, and then we can.
So angels are super simple.
Yeah.
They're kind of coming in at a time you need them.
Yeah. Usually it's just one person.
Yeah. Usually it's like a solo. They don't need to be. So this is a term that's I don't know how many people are going to be familiar with, but. The term accredited investor.
Yeah.
So being an accredited investor is when you kind of like check a lot of boxes. And if you just Google this, you'll see all the criteria that make you an accredited investor. So a lot of angels are, sometimes they're not.
Yeah.
They'll still invest in your project, but angel investing is usually not larger than $100,000. So if you're kind of like coming into an investor, you're like, hey, we just need this to kind of get us going to this point, take us from point A to point B. We need $60,000 or $30,000.
So I think this might be a good picture for someone that's listening, like something they can think about, right? Can you put it on a scale in regards to, let's say, stepping stones, right?
Yeah.
So if you need money, right? So it'd be what? Let's say first is friends and family, right? That'd be number 1. Second might be crowdfunding. Third might be, let's say, an angel. Last on that scale would be a VC. So that's accurate?
Yeah, I mean, that's in terms of a scale. But what do you mean by scale? Like priority?
I'm not saying.
What's the question?
I guess the question might be
like, what should you do, or in terms of value, importance? What are we talking about?
I think in just like size and like a starting point.
Oh, like monetary size?
Yeah, and like chronological like order. Let's say.
But I think that's all.
I guess it's subjective.
It's subjective, but if you're self-funding, it really depends on how much up until what point. For me, it was significantly different than a lot of other self-funders.
Yeah.
And then there are like friends and family, like you can raise $20,000 for friends and family. You can do $100,000. You can
it's
more
subjective, depending on what your friends and family look like. Yeah, for sure.
If you got a rich uncle that it's still not a big deal.
Throw you $200,000. I mean,
then it's it's very subjective. But in terms of like, it's really just access to what you have and what you're comfortable doing. I was not comfortable going to friends and family.
Yeah.
I've never raised a single dollar from any relative or I've never done that. It's not, you can call it ego, you can call it, But for me, it was more of like, I wanted this vision to be solely about myself and what I had in mind. And I didn't want to, that's why, like I told you, that route for me was more of like me investing my own money, and my money ran out. So I had to go make more money.
Yeah.
It was an ongoing thing. So I just kind of wanted to just do it all on my own. That was the goal.
Yeah, I'm with you there. But again, if you want to go quick, you go by yourself.
Yeah.
If you want to go far, you go with your team.
We've talked about this so many times, right? We've talked about investment, even at FFP, multiple investment opportunities. But it was one of those things where okay, you bring on an investor, your landscape changes. You now have to answer to a group of people or an individual that.
Yeah. You got your team just got expanded, and now that person's opinion
more
matters.
You've got a boss, and you have to answer.
Yeah.
Whether you want to say that or not, you've taken their money, and now you have to answer. And that happened to us. That kind of changed, right? When we skipped. So for me, it was self-invested, right? We skipped the friends and family, then went to angel, then went to VC. We also skipped crowdfunding, by the way, but because when I started the first company, crowdfunding wasn't a thing. Yeah, it was.
Well, there we go. That's the question I was trying to ask before. What? Like your timeline. So you self-funded, then you got an angel, and then you went to a VC.
Well, me personally, I skipped those two steps, but yeah.
I'm saying you just said you did get an angel, or no?
Yeah.
All right, so you were self-funded. You skipped over, let's say, crowdfunding.
I got multiple angels.
Then you got some angels.
Yeah.
And then you went to the majors and got a VC.
Correct.
Okay.
Again, traditionally when you're going to, why do you, I guess it's important to understand why would you even go to these people, right?
Well, I guess more so, if you already got VC investment, are you going to an angel?
If you're, it really depends on how desperate you are.
Okay,
because
fair.
So let's say you've raised, so VC investment, just to clarify, right, is when you're raising a seed round or a Series A or anything when you're going to a big venture capital firm, and you're saying, hey, this is the plan, and they're like, okay, we'll put in $500,000 or $1 million or $2 million. I don't know. Now we see billions in some crazy projects. But. It's more of okay, let's say you've butchered it all, but you still believe in the project, and you're like, okay, man, we still need a little bit more, and you're kind of I've seen this happen. Yeah. That's exactly what I'm saying. I've worked with people like this. They were delusional. I wouldn't even say optimist. What is the word did you say? I forget.
I don't know.
Optimistically delusional? I forget what it is. Yeah, something like that?
Yeah, optimistically delusional?
Yeah. Something like that, but
delusionally optimistic.
Yes, that's what it is.
I just it
was something like that. But what it was delusional optimists is what the word is. There it is.
Okay.
But some people just don't get out of it, and they think oh man, it's just it's an ego thing, and it becomes I have to you have to learn when to walk away. Again, we'll talk about the philosophy of things in a future episode without digressing too much. But the reality is when do you that's a great question. Do you go back looking for angel money if you've already burned through VC money? Let's say you burned through $1 million. Do you go back to a smaller investor and say, hey, we need another $50K? So that's, maybe. I'd say not unheard of. That's for sure.
Yeah. So I guess as we kind of wrap up here, I think there's one major thing that we want to touch on. How do you do this?
So
let's do, I think, friends and family, self-explanatory, right? Crowdfunding, just go on the website and they'll onboard you, and that's pretty self-explanatory as well. So let's talk angels. Let's talk VCs. The floor is yours.
Angels, it's all about networking. At the end of the day, there's not going to be a group of people that you're going to find on a website that you can Google
not yet, at least.
Find me. Well, I just don't see the value prop in something like that. It's also a massive giga data load of something that people would pay a dirty amount of money for. It just would never exist.
Yeah,
that's why you haven't seen it. But it's all about who you know. And if you don't know anybody, you got to go out and make some friends. You got to go out and network with people that have access to certain people that you need to kind of get into. Even when it's very important when you partner and you get investors. What are they on brand with your brand? That's really important.
Is it a good fit? Not all money is good money.
Correct.
Yeah. I'm with you on
and
that.
that's like
100%.
that's very, very important. So I think, you know, when you're talking to people, like talk to people that if you're in the real estate world, talk to people that have done stuff in the real estate world before. If you're in the sharing economy world, talk to investors that invested in sharing economy projects. And I think it's important to identify who you're targeting before you go out there. It's not going to be a wide net that you're going to cast. It's always better if you approach more tactically and strategically.
Well, that's kind of what I wanted to. I'm glad you said that, because like that's, you know, if I was listening
to this right now, like that's what I want to know. So let's say I know an angel.
Okay.
Right? Like in your mind, what is a good way to approach them? Like how? Like how am I actually approaching them?
So it's always good for me. I'll talk to you about it from the other side. If I meet somebody organically at a networking event or at a party, and they're just pitching me right off the rip, it's just like awkward. Doesn't come without like sort of a warning. I hate it. That's happened to me so many times. I personally hate it. I don't enjoy it, and it feels like you're not there for the right reasons.
Yep.
It's always nicer if you warm yourself up. Don't go for the kill right when you see them. If you ever have been able to position yourself that way, make a connection first. Talk about other things that are not related to money right off the rip. You know what I mean? Just
yeah, I mean, I think
right off rip. I don't know. I keep saying that. Yeah.
Well, I think for people listening, you know, the networking episode would be very helpful with this, right?
Yeah.
In regards to having something in mind that you want to talk to someone about, but not being weird or just upfront about it right away.
No.
But go ahead.
But like on the other side, I've also been on the other side when, you know, almost like a decade ago. This is when I was doing this like crazy, right? I've been on the other side where I've tested that out, and I've done the approacher. I've done the aggressive route. I've approached people aggressively, and it just doesn't work out. But but then it's always good. I always listen when somebody introduces someone to me. Like, let's say you're like, hey, I have a friend that I know you don't really typically listen to a lot of these, and I know you don't want this, but I seriously think we've got something here.
Okay.
Maybe just worth your time checking into
worth
it.
like 15 minutes.
I also and then if you get a warm introduction from somebody, that will go into like that'll be on my radar a lot more, and that's something that I'm more inclined to listen to that and listen to that pitch. Now again, like this doesn't mean that everybody that's listening just go ahead and like send invites, but the reality is, the human mind, or at least like from what we're used to and how we're familiar, like we're a lot more comfortable when it's a familiar face introducing something.
Yeah, for sure.
You know, a lot less hostile. That's the word.
Well, there's some level of validity, but then also trust. You know, that he's ain't no like Adam Newman or something.
I want to drop a crazy hack though, something that I've done before.
Okay, turn the volume up.
I've done this back when my first startup, when when technology was kind of becoming more and more prominent, right? I mean, I'm talking like I'm from the 90s, like I am, but it's like this is we're talking about early like 2011, 2010, right? When I was trying to network, so this is something that I would recommend. Hot tip. I was trying to network.
Okay, hot tip, volume up. Please explain the hot tip.
So I would basically connect with people so on LinkedIn, you can see who people's mutual connections are, right? I would make a list. I would make a list of my targets. And then from the targets, I would basically see who they're mutually connected with. I would connect with the people they're mutually connected with first.
Right.
I would become friends with them. I would talk to them, link up with them, meet with them. Leverage that as them being friends and being connected to the investor you're targeting. And then ask for a mutual warm introduction. This has worked for me.
Rinse and repeat, baby.
You can't even imagine how many times. That's leveraging technology. And if you're like, if you wanted to, I don't even know if it's safe dropping this, because not a lot of people know this. Not a lot of people use it like this.
Yeah, it's something that's like, oh, as you're listening, it's like, oh, that makes sense. But, I mean,
it's almost like, why didn't I think of it first?
Well, yeah, but like we're all people at the end of the day. And even if, you know,
but at the same time, I also don't want people to blow it up and abuse it, because it's different now. Now it's like less. Back then, it was like it was difficult to even become friends with somebody that you're not in the same. You know how LinkedIn has different layers of like networks. Now it's like you can pretty much connect with everybody, but the concept is still the same.
Say that, but yeah, for sure, it's definitely different now.
But I would just say, like, if you don't have the time to meet with somebody that's in LA and you're in New York and you're like, oh man, really want to pitch to this investor, I want to get 5 minutes with this guy, you have no idea how effective that method was. For me personally, and again, I haven't done this in years, and I feel like I'm on the other side on a lot of this scenario now.
No, I would say, like, for me, I would say that's 100%. I've done that a couple of times, not for, let's say, you know, trying to get investment, but
to get
the
introductions.
strategy to get introductions.
Well, the thing is,
this is
but like this is such an aggressive space to be in, where it's like, you know, if you don't have if you ever burn the bridge or you shut a door, you can't revisit that with investors. It's like, you know,
I mean, like it's crazy because we're kind of making some, you know, references to the networking, but this would be an important reason networking. To never, well, not even that, but never burn a bridge. Like ever, like don't do it unless, I would say one of the other reasons would be, you know, if they did you dirty or you know, scammed you or, you know, something like that. But like, always do your best to leave on good terms, even if they did, you know, do you wrong. I think it's always best to leave on good terms, because you just never know what the future will hold. You know, but I digress.
So, I mean, that was more like, because you said about angels and VCs, like sometimes you can even meet these people, and with the right people and the right introductions, you can, you know, pitch to a VC or set up a meeting where it would take months to even kind of let them hear you, because they get so many submissions to the website. Like if you just go to any top VC firm or any regular VC firm, they're getting bombarded with meeting requests and pitch ideas and pitch decks on a daily basis. So sometimes, unless you really stand out, and they've got levels to it when their due diligence team is crazy, right? They're just looking at it, vetting every single thing that's coming in. Garbage, not garbage, good. Potential meeting, right?
But without a doubt, and I think it might be worth, you know,
if you could give, let's say, 60 seconds to what a VC meeting looks like, if you're trying to get
from
investment.
An experience perspective?
Yeah, 60 seconds. You have someone here that is
trying to, you know,
like how
get a meeting with a VC right now. Let's say they even potentially got one.
Hot tips, 60 seconds of advice, things you want to prepare. Time starts now.
Your branding needs to be absolutely on point. Your idea, your vision, your roadmap of what you're pitching in an 18-month period, that's really important. It's not something that's outdated. It still happens. This day and age is very important. Value proposition, intellectual property, competitor analysis, you know, the SWOT analysis. All of that needs to be in check. You know, who are the founders? How involved are you? How all in are you? I've invested everything I've got into this. I'm all in. I'm not going to stop until this comes to life. I can't really tell somebody to have the perfect, this is none of these components. These are ideas and strategy tips, but it varies. It's subjective to the concept and the idea. But typically, if you're in a VC meeting, you're more likely have more than 60 seconds. So you're talking more of like an elevator pitch.
Well, no, but I'm saying for the listener, right? Like 60 seconds, like some hot tips for them to listen in.
Yeah, I would say that's pretty. Those are probably some good hot tips, and just, you know, of course, practice. Practice. You know, we talked about this in the networking episode. If you've landed a VC meeting or you're in those meetings, you've like the amount of pitches I've seen like botched is crazy. So practice. Practice makes perfect. That's
practice makes permanent.
Love that.
If you practice it the wrong way, it will be permanent.
Love that.
Little side note, but yeah, definitely practice.
Practice. If you do something long enough, you'll be good at it, no matter what it is.
Yeah, no, we're talking about like branding in like a future episode, but I think we like, you know, how to perfect your art or your brand, your craft, and just like be more presentable, and how to get ready for these things is something we can talk about in the future.
100%.
It's a deeper topic, man. It's not something you can do in like.
Yeah, I mean, I feel like we still miss a couple of things with this, but you know, I'm hoping we did a good job.
I think we covered a lot. I also want to like note, like we're not claiming to be perfect people, or these are the perfect methods to do these things. We're just telling you things from our experience and what we've experienced, not by any means saying these can apply to you. If we missed any methods of raising money, please drop it in the comments.
Yeah, I mean, I'm sure, you know, we might have. And again, like Saj said, just experience, insight, you know, because you're talking to two people that do this like legitimately 7 days a week and deal with these kinds of things 7 days a week.
Very much. I mean, this is where from the startup world.
I mean, that's just really what it comes down to. So, again, I think that will, I guess, kind of wrap us up. You have any closing thoughts here that you want to mention, or what do you think?
Elon Musk
buying Twitter.
Elon Musk buying Twitter.
Sicko. No matter what, I mean, I guess initial thoughts quickly.
I think it was his plan this whole time. His plan was to buy a major share, and didn't really disclose this. I mean, his team probably knew what his agenda was.
Maybe,
but his agenda, 100%, man. You don't just. He's not Elon Musk is not like a crazy person. He comes off that way, but he's not. Well, he's a highly calculated.
No, I
individual.
can agree with you with that. I think he's very calculated, but I do think he's a little like.
He's a little eccentric. That's probably what you're thinking. But I don't think he's crazy. No way. But I think that this was his plan all along, and I think it's for the better. Hashtag free speech. So
hashtag free speech, and he's also. I've read that he's trying to implement a way where creators can make money from with crypto from Twitter and tweeting and stuff. Super excited to see. Because, it's funny. I was, not to get too specific, but I was talking with, some clients today, and I think Elon will be able to break down the barrier for places like Apple and Google to have mobile apps, integrate crypto to that kind of level.
Well, here's the thing.
I'm hoping
Twitter is major. Twitter is the major league. Mm-hmm. It might suck and might not make money as a company, but Twitter is the.
Well, it's gonna. I'm hoping it will. Oh, I think so. Also, it will open up the door for platforms for a startup to now implement some sort of tokenomics or crypto into
100%
their platform.
I think also it's important. No, people feel like this is already happening. Like it's happened. But deals like this take 6 to 9 months for it to officially be locked down on paper and actually go into effect. And some of these things that Elon's saying will not visibly be in effect for probably a year at least. At least. But it's interesting to say. I don't know if you saw this. This is my last comment on this.
Okay.
It's like $1 billion breakup clause. Did you read that?
No.
So if for some reason the deal doesn't go through from Twitter's side, like the Twitter board, or it doesn't go through from Elon's side, the other party has to pay $1 billion as a penalty fee.
Who do you think implemented that?
I don't know. Probably Elon.
Elon
Just sicko.
That's just something it just fits him that he would do.
But isn't that crazy? Isn't that so interesting?
It is. I mean, I like it. I can't. I like it. Yeah. It also kind of makes sure both parties are serious, kind of too.
Yeah.
So I like it.
I love Elon Musk. So
I'm a big fan too. He's doing a lot for the world, and I think his intentions are good. So
yeah. I mean, he's a billionaire, and there's all those ideas associated with billionaires. But I think there are different levels to billionaires.
Yeah, but you can think about how he became a billionaire.
Yeah.
Which is important. But as we digress, we're hoping everyone listening and watching, you learned a couple of things that will help you on your hustle journey while you're hustling your venture.
Yeah, hopefully this was valuable, and hopefully it's good information.
Yeah, absolutely. And as always, definitely comment. Like we mentioned, we read the comments. Like the video, it does a lot for, the channel, more than you may think. Subscribe to the channel so every time we post, you're aware and you get that notification. We're on TikTok, we're on Instagram, Spotify, Apple, anywhere that you would think we are, I can assure you. So we appreciate you guys for those listening, as always, and hope you guys you enjoy the rest of your day or night. So
thank you. We'll see you next time.
See you next time.
Venture hustles, this is venture hustles. Turn nothing to something, start a business, get it jumping. Ay, told myself that I would make it and I'm never quitting. Staying motivated and I started with a vision. Yeah.